Right, welcome back to ET Now's Buy Now Sell Now with Adhiraj Singh and Vinny Botiwala. And now we have the privilege of getting on board Kavinder Singh, who's the MD and CEO of Mahindra Holidays and Resorts India Limited. A very good morning, sir, and thank you so much for being with us here on ET Now. This is Adhiraj, and we'll get straight to it. The first question I would like to ask you, of course, is the EBITDA and the PBT benefited from lower expenditure driven by reduced business activities due to the pandemic and the one-offs. But operational performances has still been muted. My question here is, what is the outlook on growing of the bottom line and margins?
So just to give you a sense of the numbers, our income growth, which was there, which we declared, was at about 14% YOY, which is the standalone income. Our resort income was at 68 crores, which is a growth of 34% YOY. And this is the best ever quarter we have had in Q2. As you know that in Q2, it is not a seasonal quarter. And despite that, we saw 14% growth in standalone income, total income, and resort income at 34%. If you look at even the consolidated Q2 PAT, which is at 41 crores, it has had a sequential growth of 39% on quarter. So despite the fact that quarter one is a seasonal quarter for us. And if I were to look at all the other parameters, whether it is the costs, whether it is the margins, and since your question is specific on margins, I would like to maintain that our margins at 27.5% EBITDA margin are industry's best margins, around 14% PBT margins. And all these margins, you have to bear one thing in mind, that last year we had some benefits which came in through the lease rent waivers, as well as there were some one-off interest on income tax refund that we had got. If you were to net that off, our PBT growth is 5%. Our margin is healthy at about 14%. And as I said, EBITDA margin is at 28%. And if I were to compare it against pre-pandemic, our EBITDA margin has expanded by 500 basis points and profit after tax margin has expanded by 280 basis points.
Right. Mr. Singh, this is Vinny joining in as well. And, what we want to understand also is in terms of that the company is now planning to acquire properties to add to its inventory. So what are the kind of acquisitions you are eyeing and who are you in talks with and when will these acquisitions actually materialize?
We are constantly looking at enhancing our property portfolio. As you know, we have added 116 rooms in this quarter. Our total inventory stands at 4,715 now across 86 resorts. About a few years ago, we used to be at 2,400. So we have almost doubled our room count in about 6 odd years. So we are growing and we are looking at acquisitions. We are looking at building. We are looking at buying. And to your previous question on digital, I must say that we have done a lot of work in getting memberships through digital and referral route. We have 57% of our memberships are coming through the digital and referral route, and we continue to invest in digital. We had launched a very successful campaign featuring Ms. Raveena Tandon, which was about moms know best when they want to plan the holidays for their family. And that also helped us in getting very high member additions. So our member addition focus will continue. Digital focus will continue. Property acquisitions will continue. And there are a lot of properties which are currently being looked at from acquisition standpoint, as well as also leasing. So if you notice that in H1, we have now added about 200 rooms. Just to also let you know, on H1 basis, our profit after tax has grown by 86% on H1 level at consolidated level.
Right, Mr. Singh. Also, another important question, of course, the company has the advantage of the domestic tourism boost with festivals and December bookings heavily underway. How are you looking to exploit growth in Indian domestic tourism and any travel trends that you are noticing now?
So the good part is that the October occupancies have done very well for us. I mean, we closed October at about 82.5% occupancy. And as I always mention that, please remember that last year we had 500 rooms less. This time we have 500 rooms more. On that basis, 82% occupancy is a significant achievement. So obviously the festive season, we were full. The bookings for the November mid onwards till December and look very robust. And we are doing our, of course, a lot of marketing campaigns within our member base to make them holiday, which of course they are very willingly and very happily coming and holidaying. And therefore our occupancy situation in this quarter again should be the best ever.
And Mr. Singh, lastly, we want to know in terms of the average occupancy growth you are working with, what are you working with over there, and what is the outlook in terms of pricing as well? And, will you take the advantage of the strong demand and, have you increased any prices on packages as well?
Yes, we have increased prices 2 times in the last 1 year. We continue to relook at the prices for our memberships. We continue to look at the prices at our resorts for the F&B and the holiday activities. And this is a constant activity. Just to let you know that we have weathered the inflation storm pretty well, as I just now showed it to you, that our pre-pandemic, if I were to compare against pre-pandemic, because during the pandemic, there were a lot of one-offs, as I mentioned earlier, our margins are looking very, very healthy. In fact, the healthiest ever. So we will judiciously take calls on price increases, if any, but the focus is also on cost management to drive higher margins for our business.
Okay, thank you so much, Singh, for joining in with us this morning on Buy Now, Sell Now and giving us all the insights about Mahindra Holidays and what should we be expecting from the company going forward. But let's get back to your stock-related queries.